ITC did not give returns for 6 years almost, and suddenly it gave 100% returns in just a matter of year or two. Today, we can look at such companies where even though the fundamentals are very good, the share price has not moved for 5 to 6 years, and they are at a zone where from they can actually give very good returns. So we're going to look at five such companies today, and a few of them are really good companies. They have posted very good sales growth, profit growth. It's just that the stock has not given return for the last 5 6 years. Hello and welcome to the Petronet Emmbi channel. So in case you're new to my channel, I teach a lot of stuff around technical analysis, especially how you can use technical analysis for stocks trading and investing. So let's get started with today's videos. So as always, this video is an educational video. I'm going to teach you how to pick stocks, fundamentally good stocks, using technical analysis. And today's focus is going to be on a few fundamentally strong good companies as well. So let's get started. The first company today we are going to focus on is Dhanuka. Now, Dhanuka is from the agrochemical space. They are a company which manufactures fungicides, insecticides, and also pesticides. Now, this company is a small company. It has around 3,800 crores market cap. It has a PE of 17.6 and ROCE of 27. Now, remember always, as a thumb rule that at least I follow, whenever the PE is lower than the ROCE, which means there is a potential for the stock to give returns. So in this case, the PE is way below the ROCE. Right now, looking at the sales numbers, I always do some fundamental checks. Now here, if you see, the company had kind of stagnant growth here, and then suddenly from 1,000 crores in 2019, they have gone to 1,700 crores in sales. Now that's a 70% jump in just a matter of 4 years. Now, these are very good sales numbers. And also just observe the operating margins here. The operating margins have also risen to almost 18-19%, and this year has been a consolidation year. It's back to the normal 16%, but still the numbers are pretty good. And looking at the net profit here, also we have gone from 100 crores to almost 230 crores. Now again, an all-time high. PAT growth again is very good, and it's an all-time high. So overall, the sales growth has grown at a 15% CAGR in the last 3 years. The last 5 years, it has grown at 12%, and also the PAT has grown 15% in the last 3 years. Now these are phenomenal numbers for any company. Okay, now let's move on to the charts, because in the charts, if you see, there is a very strong consolidation. But before that, a short note on the shareholding pattern. Now in the shareholding pattern, if you see, from September 2021, FIs have started increasing stake in this company, and today we are around 3.55%. Also, DIs have increased their stake from 14% to almost 17%. Whereas public holding, people like us, we have kind of sold, and today it's around 9% stake. That's what the normal public holds. But the interesting point to note today is the earnings. Now, the company has been posting very good earnings, right? So if you see, this is the blue bars here are the earnings per share. And if you see, we have gone up steadily from almost 15 to almost 35 rupees. Now that's a very steady growth in the overall earnings, which means the company has been doing phenomenally well. But the share price actually has gone down, because of which the PE has been almost also going down. Now share price has been going sideways, not really gone down, but overall the PE has gone very, very low. So we are today at a PE of around 17. And if you look at the median PE, it is at 18.1. So we are trading at even an evaluation, at a valuation of even below the median PE, which means there's definitely room for this company to grow in terms of stock price. Okay, so let's move on to the technicals. If you look at the technicals here, this is the quarterly chart of Dhanuka Agritech, and we have been going up steadily, right? But since 2017, right, 2015 onwards, we have not done much. So we have almost around the same level since 2015, 2017, right? But what happened in 2017 is we had a nice fall, and then we reversed, and then we have been going sideways. So we have not yet broken the highs of 2017. There's not been a convincing closing about 2017 highs yet. So fundamentally, the sales has grown a lot in the last 5 years, but the stock price has not done much, because of which the PE ratio is now at 17, which is below the median PE. So let's move on to the weekly charts here. On the weekly charts, the stock has been in a sideways consolidation. So we went down, have been going down consistently and steadily, and then we kind of reversed very strong. So we reversed from almost 500 levels to 700 levels. Today we are 840, but there was a very strong reversal that has happened, and we also formed a higher high, which means the trend has now changed from a downtrend to an uptrend, right? And then the stock kind of consolidated here for a few weeks, 3 months consolidation. We had a retest over here, This was a retest zone, and now we are breaking out again. Now, from a technical perspective, this is just the beginning of a very long-term uptrend, in my opinion, because we went sideways, fell down, we tested that channel support again, and now we are back up and we are heading higher. Now, the point to note here also is the volumes. The volumes have also been pretty good, and CCI is now again trending up. Also, relative strength also is trending up. So overall, this is a very good fundamental pick for your portfolio. This also could be a long-term SIP candidate because the stock is trending in a long-term channel. So I don't expect the stock to break down from this channel. So you could consider this as a SIP candidate or investment or a positional trading candidate as well. So the stock is a very good buy at current market price at 840, stop loss of 9.5%, which is around 760, which is around the lows of this day. And then we're looking for targets of 1200 or 43% as a positional trading bet. If you're an investor, just invest 5% and let it go. It can go even to up to 2000 levels. We don't know how far this company price can do, but the fundamentals are very good and the technicals should support it and the price should also move higher. So that's the first pick for today, Dhanuka Agritech. So moving on to the second stock today is another beautiful company fundamentally is Petronet LNG. Now this company again is a very good company. It's a mid-cap company, large cap company, in fact, 37,000 crores. ROC is 26% and PE is 11. That's what I call undervalued stock. Now here, the sales has gone up. It's gone up from almost 40,000, 30,000 crores to almost 60,000 crores in the last 5 years. PAT has also, the operating margins also have been stable. It went 18%, could not sustain, and it is back to the historical 8%, which is what we've seen here, right? And also the PAT has hit an all-time high of 352, slightly hovering around there, around the 3,300 crore mark, right? The sales growth has been very good, 3 years, 19% growth, profit growth is 6%. Now remember, this is a very good company fundamentally, and also here, look at the market cap, it's been doing pretty well. Now moving on to the shareholding pattern here. Also here, if you see the company promoters hold 50%, and the FIs have increased the stake to 34% right now. So they have been increasing since the last 1 year, it's gone up. Also, DIs have kind of reduced, but the public shareholding is kind of going down, right? If you see, public shareholding has been continuously reducing, and FIs and DIs have been lapping onto the shares. And if you look at the EPS over here, we've been seeing a very steady EPS growth consistently since 2016, right? It's been going up and up and up, but the share price has not done much since 2016 odd. And that's why the PE has gone way below. And today we are trading at, I think 11 PE, and the median PE is around 14.2. Now this is a very good benchmark. Always keep, it's a thumb rule. It might work sometimes, it might not work sometimes. But if the stock PE is trading below the historical PE, in this case, then it's probably a share that you want to look at, right? Now let's move on to the technicals. Here, if you look, the stock has been in a very long-term uptrend. We've gone from almost 5-6 rupees to almost 220 rupees. We had some major dips in between here, but when you connect these 2 points over here and you extend that channel, we have a beautiful, beautiful long-term channel. Now this channel, we have multiple rejection points over here as well. So that's a nice channel there. And then since 2016, 2017, we have been going sideways. Now this is a major support zone. So until the levels of this level doesn't break, I don't see a major problem in the stock. But what's happened this week is we've had a crazy breakout this week. We are just beginning of this month, just monthly chart. So you don't see the volumes here, but this is the beginning of the month and the volumes have been very good. We look at that shortly in the weekly charts. But this is an amazing descending triangle breakout, and we have closed above the zone for the first time in 7 odd years. Okay, so let's zoom in here and see the weekly charts. So this was a downtrend since 2019, and we've been going down continuously. And here we've had a breakout. Now look at the volumes over here. The volumes have been very good compared to the last couple of years or so, 1 year or so, right? So it's a very good candidate again for investment portfolio, also for positional trading bet. This could be a very good bet. And for swing trades, you can find some dips in between, and then you can buy the stock accordingly. So entry at 250, a stop loss of just 10% here, which is around 225, which is around the levels of that. And then we're looking for targets of 430, which is the channel middle. So somewhere around the middle of the channel is 430. And that brings us to a target of 72%, right? Again, as an investor, don't just sell it off at 72%. You might get much higher returns. Try to ride the trend. 5% position size is easy. You can ride the trend as much as possible. So that's the second pick for today. In case you're liking this analysis, don't forget to buy me a coffee and share this video with your friends and family. Let everyone learn. And that's been my primary objective with this channel and with my Twitter. Let's educate everyone with technical analysis, and let's help people learn and grow as well. So let's move on to the third pick for today is Emmbi Industries. It's a very small company, around 200 crores market cap. It has a PE of 29.7, ROC of 9.16. Now this is not very undervalued, but it's okay to have a small cap company usually trade at higher PE. But here, the point to note is again, the sales has gone up from 100 crores to almost 400 crores in 2022. And then we had a dip in now in 2023, and also the operating margins have been kind of stable. So a profitable small cap company. It's been posting consistent profits, so not a problem at all, right? It's just that the consistency in terms of the growth hasn't been there in this company, right? Since if you see here, the PAT growth has been kind of degrowing in the last 3 years, right? So we hit a high of 18 crores, 19 crores, and then we've not kind of crossed that level. And I think the stock is probably preempting that there might be good profit and sales growth going forward. But the sales has grown very well. We have been consistently growing in terms of sales except for 2023, right? So that's from a fundamental perspective. Technically, this stock has retested a multi-year channel support. Now, this was the COVID crash, and then since the COVID crash, we went up, and then we have been going sideways. Now, remember, many companies had this pattern in the past, right? We've had Force Motors, we've had a lot of other companies retesting, going here, and then going sideways. Now, if we see a strong breakout, which we're already seeing, then we can head towards this channel middle here easily. Okay, so from a fundamental perspective, it's decent, not very good like Petronet or Dhanuka, but a very small company doing decently well, and we can expect some good returns going forward. So this channel is very nice. So we can also head to the upper end of the channel if the company posts some phenomenal numbers. So for now, let's not get into dreamy targets, but for now, this channel is looking good, and we've had a breakout for the first time in many months. Okay, so zooming in, this was that breakout that we are seeing here. So we had a nice downtrend here, or a consolidation you could call it, but we never broke this previous swing low, right? So in terms of an uptrend, for me, this is an uptrend, right? So, and here the swing low is here. So until the previous swing low on the uptrend is not broken, it's totally fine, right? So we are still forming. So you can consider this one big move, and then we are heading higher. So overall, it's still an uptrend for me, right? It's just that we had a consolidation here. This is a long consolidation that we've had. And for the first time, again, we are making a higher high and amazing volumes this week. Excellent volumes, and we are heading higher from here probably. So entry at 112, stop loss of 98. Now, in case the stop loss hits by any chance, then you can consider entering again on the next consolidation and next breakout. Okay, because the stop loss is somewhere around here, I don't expect it to come below that. But in case we hit that stop loss, then consider re-entering again, because the potential is huge, right? And you're looking for targets of 170 or 52% here, and do keep your position size in check. Do not go beyond 5% or 10%, especially if you're a beginner. So the next stock today is JSW Holdings. Now the entire JSW family has been doing really well, and this is the holding company, and I expect this company also to do well. It's a mid-cap company around 5,000 crores. I'm not getting into the fundamentals here because it doesn't really make sense to look at this. I mean, if the holding parent, if the companies that JSW has does well, then this company also will do well, right? So off late, the sales has been very good. So probably, yeah, it's going to get a lot of dividends and all of that. So overall, fundamentally, this stock had a major breakout from almost a 12-year breakout in 2021, right? And after that, we did a complete retest, and now again we are consolidating, and we might break out again. So retest complete, and again we're consolidating, and we might really pick some pace up here, and the momentum can be strong, and the stock can do well going forward. So zooming in here, again, this is a nice trend line resistance, significant trend line resistance with multiple touch points, also a trend line support, kind of a symmetrical triangle you can call it, but I don't really get into patterns here, right? So here we had a nice consolidation of almost 10, 20, 12 weeks, and we are seeing a breakout for the first time, right? So almost a very good closing as well. We've not seen a closing since long. So you can enter the stock at current market price, stop loss of 10%, and looking for target of 45% here. Also note the volumes also have been excellent. So this could be a very good swing trade as well. You could keep your stop loss even tighter, look at the daily charts, and you can keep a tight stop loss as well. So you might get a good reward here. So the last company for today is Team Lease. Again, a fundamentally good company, only the margins are not very great. It has very tiny margins, but a small cap company, 4,500 crores, ROC of 14, P of 40. The company has excellent sales growth. The sales growth has been phenomenal, right? It has gone from almost 1,000 crores to almost 8,000 crores now, right? 15% CAGR in the last 3 years. Profit growth also has been very good, 46 crores. Profit growth also has been an all-time high. Only that the operating margin is very low. So it might, not be a very great candidate if you're just looking at operating margins. But overall, the company has been profitable. It has grown its sales very well, and it has grown its profits very well. So for me, that ticks all parameters, and the stock is available at a very good channel support. So that's why I'm discussing this stock today. Right, a nice move up, again consolidated, nice move up, and again we're doing the same thing. So this is kind of a repetitive pattern in Team Lease, right? So if we head higher, we are probably going to the upper end of the channel, which is around 6,000 here, right? So, but this is a 10-month consolidation breakout. If you zoom in, you will see that's a nice inverted head and shoulders here that we are seeing, and we had a breakout with amazing volumes last 3 weeks, right? The stock is consolidating for the last couple of days, but overall for me, this is a very good candidate again for positional, and you can look at for good targets here. So entry at 2665, stop loss of 11%, targets of 5,000 or 87% here. You can also look for much higher targets if you're willing to hold it for much longer. So these are 5 stocks and a short stock summary. So Dhanuka, excellent fundamentals here. Sales PAT growth looking phenomenal. Petronet also very good here as well. JSW Holdings also is very good. Team Lease is also very good. Only Emmbi Industries doesn't have a good PAT stage here, but I think it will catch up, right? So overall, all 5 companies are very good companies in my opinion, and I think it's just time for them to start performing going forward. Remember, all of them are near channel supports, are just breaking out, so they are multi-year breakouts and they can do very well going forward. So keep them in your portfolio and see where it goes. So I hope you're enjoying my videos, and I hope you are looking forward to my future videos as well. So I'm going to leave you here. Take care, stay safe, and trade safe. Until I see you in the next video. Bye bye.